So today's video, what I want to do is just cover a bit of a loophole that exists when it comes to reclaiming tax on the electricity used to charge your company car. So I'm talking about electric company cars. What I'll do quickly though before I go into this is just explain how fuel normally works for a company car. So normally when the company gives you a petrol or diesel vehicle, it pays for all of the running costs of that vehicle, but then you get something called P11D tax, which is a tax on the salary equivalent of that car based on its CO2 emissions. So what that covers the car element of it, but if your company then pays for all of your petrol and your diesel, you then get a further tax called company car fuel benefit. And so what normally happens is, whilst a lot of people have company cars where the company provides that car and they pay the P11D tax, quite often they end up buying their own fuel for that company car and then just getting the company to reimburse them for business mileage based on an advisory fuel rate. Usually that could be between 15 to 20p, depending on the size of the vehicle. So that's what an advisory fuel rate is, just the amount you can reimburse an employee based on the size of their engine and the amount of fuel they're using. So the loophole that exists with electric cars and charging a company car that's electric is electricity isn't actually classified as a fuel source by HMRC. So, and I want to do this video because HMRC have different levels of guidance on this in the past, and they've pretty much always been different from the legislation that exists. So I wanted to do this video because a lot of people, because of the HMRC guidance on it, aren't actually getting it right, and then they're missing out on a really good benefit. So what happens is, with an electric car, because electricity isn't actually classified as fuel, what you can actually do is treat the cost of the electricity to charge the car as part of your company car benefit, and it's not a separate fuel expense. What does that mean specifically? What it means is, when you're charging your electric car at home, you can actually put all of the cost of charging that vehicle, regardless of whether it's business or personal, through your business. So there's a couple of ways to do this. And by the way, that's where it's different from fuel, like petrol and diesel cars, because diesel and petrol cars, you can only put the business element through, which doesn't include your commute to work. Whereas with electric cars, what they're saying is any costs you've had to charge that vehicle at home, you can actually put through your business. So there's two ways to do this. You could just work out, a lot of cars tell you how many kilowatts they've used, and you can work out what the rate is per kilowatt hour. But another way is, you could just look at the mileage change from when you started the year to where you currently are, or at the end of the year, and then multiply it by the advisory fuel rate. I think at the moment it's about 10p a mile for electricity, and then that will give you the amount you put through. But to summarize this video, it is essentially, you are able to claim all of the electricity to charge your car, regardless of if it's business or not. If you want to find out a bit more about this, then please get in touch.